Asian markets are trading lower. You can see the Hang Seng now down 0.9%.
52% growth in the volume of digital transactions and 12% growth in the value of these transactions.
On the way up, broadly, the targets remain 25,000 to 25,337.
Very strong earnings from Colgate this time around. It could well be the result of the season for the FMCG company.
Any future issuance of 14-year and 30-year bonds will not be classified under the fully accessible route.
10 points, 12 points, 24,818. Flattish start, actually.
The first quarter has started on a very muted note.
Now we're up 100 points on the Nifty. The Nifty is comfortably above 24,900.
Ecom Drugs, that's opened its IPO today.
As far as thermal capacity is concerned, NTPC will be adding close to 26 gigawatt.
Now FY24 saw revenues of around 6,500 crore rupees.
हर सेक्टर में बजट में ये रिकॉर्ड बढ़ोतरी.
There is a sudden rush of buybacks on Dalal Street.
Markets have come off from the highs around 90 points.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's a good-looking screen once again this Tuesday afternoon. This is Closing Bell. That was a day so far, and it's been basically marked by a little bit of doubt, a little bit of this and that. But broadly, as we approach the last 60 minutes of trade, the Nifty has got 100 points to show for it. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Guys, it's going to happen. 25,000. Nigel, what do you say?
Yes, it's happening today.
Okay, he said it. There we go. We're 50 points away from the mark. The highest we got today was, about 30 points away. The day's high was just about 24,970. So let's see. Rima, what's your sense?
Not today.
Oh, not today.
Not
okay.
today. We've got to have both sides, right? This is how we remain unbiased.
I think Surabhi's taking bets.
No, I'm just hearing the two of them. We've got a bull and a bear. So, Prashant, you're the tiebreaker.
I'll weigh in once it hits 25,000.
But it's a big global week also, right? So many earnings, particularly global tech majors. You've got the FOMC minutes meeting. So I guess even that will have a part to play as the week progresses.
No, absolutely. And I think FOMC, the decision tomorrow evening, and then there are all these big earnings, etc. But in any case, we've had good data, bad data, all kinds of things from the global arena, but the market here is paused, for a day. But that's it. The market, the trajectory has been unstoppable, and we've continued to move higher and higher. And absolutely no two questions about it. And market breadth is positive, by the way. So you got about 1,700 stocks which are higher, 900 stocks which are lower. So this is once again a very, very vibrant, buzzing screen as far as the mid and small cap part of the market is concerned. If you want to look at sectors and sort of pockets, the government companies are doing very well. The index itself is up 1.5%. So yesterday it was PSU banks, which was the top gaining sector. Today it is a CPSE index, energy, PSE. Actually, the top three gaining sectors are all public sector indices. The small cap index is up 1%. And the private bank index, I can spot, is up about 1% or so as well. So that's a new one, which we've not seen participate in any great fashion, but it is today. Then you got autos as a space which is doing well with about a 0.75% gain. And that's it. So a lot of government companies, you got private banks and autos as far as sectoral spots which are doing well. But I think the real, the market really belongs to single stocks in the broader market, mid caps and small caps. And those are really fighting away once again. Rima.
Well, just to take you through some of them in the broader market. So Kansai Nerolac post numbers is up close to about 10-11%. You've got gains in Philips Carbon Black. We've been talking about it. That's another 10% gain. Nykaa has moved up nearly 7%. Then throw in, some of the PSUs like an MMTC, that's up. HPCL, BPCL, so all the oil marketing companies too are on fire.
Absolutely. Throw in more names. From the SP Goenka group, you've got stocks like PCBL on the higher side, almost 10% higher. You heard the sound bites, of course, yesterday Mr. Goenka in conversation with Shireen. Those stocks have done really, really well today. There are more names from the capital market space. There is CAMS about 9% higher. There is IIFL Securities that's having a good day once again. And more names. There's Nykaa 7-8% higher. It's just a long list of winners out there. And a market that's looking good with the Bank Nifty leading it for a change today. 0.8% up on the Bank Nifty. Nigel.
Well, that's right. And we have the Nifty Financial Services Index that plays out the weekly expiry later today in the next 60 minutes or so. So that's going to be important. Just to highlight a few stocks that are moving around. Chambal Fertilizers, it showed a lot of promise at around 530 rupees. Then it corrected to around that 500 bucks. Now in the last few minutes, that one has spiked up. Deepak Nitrite as well seems to have something going for it. So that stock is well bursting away in the last few minutes. So I think, a couple of these names are doing a thing of their own. And Exide, after the kind of run that it's had, it's coming for some mild profit taking. But let's find out, how do you trade the Nifty in the last 60 minutes and from here on? Mitesh Thakur is back with us. Mitesh, should we put this question at the start of the show? 25,000 today?
I think, I am slightly on the positive side. The reason being, yesterday we had seen the Bank Nifty weaken as we approached the 25,000 mark. Today that's not happening. And while we have only about an hour left and still 50 odd points to go, I think there's a good chance that we might see that. But if not today, then I think maybe after a couple of days of pullback, I think we are very likely to make new highs. So in that sense, stay positive. I have a buy on Navin Fluorine and Bajaj Finserv. So Bajaj Finserv is a buy with a stop below 1645 for targets of 1720. And Navin Fluorine is something, which has given a good breakout today after 3 to 4 weeks of consolidation. So buy here with a stop at 3700 for targets of 3900.
Some of the tech names are also pushing higher. So Tech Mahindra is up 0.7%. Infosys is now back in the green. So watch for the technology names too in the last 1 hour. But let's talk about Philips Carbon Black. That's buzzing in trade. Sanjeev Goenka, chairman of RP Sanjeev Goenka Group, said while speaking to CNBC-TV18 earlier that profitability of PCBL should see a rise of 5x in the next 5 years. Sonal joins it with the details on this. Sonal.
Well, yes, Philips Carbon Black, now the company's changed the name to PCBL, is the largest manufacturer of carbon black in the country. And the stock is up 10% today. We've seen a good rise in terms of their financials as well. The revenue, it has risen from 3,200 crore rupees in FY20 to levels of 6,420 crore rupees in FY24. Even the margins, after reaching levels of 14% in FY20, are now standing at 16% in FY24. Profits accordingly have also increased from around 288 crore rupees in FY20 to 491 crore rupees in FY24. The management has been on an expansion mode in the chemicals business. This is something that we've seen in their commentary earlier as well. In Q4, they indicated that they need to add capacity of around 80,000 to 100,000 tons per annum of carbon black to meet both their domestic and export demand as well. Asian countries such as Indonesia, Vietnam are the key export markets, and they are likely to remain so as well. The thing is that the street is worried about their debt because they're going on an expansion mode. So the debt currently stands at 800 crore rupees. But how will they fund their future expansion is something that the question is about this particular company. We spoke to the company yesterday and they sounded very bullish. They said that margins can go to levels of 17 to 18% versus 16% right now, which will be aided by the specialty business, which is just 9% right now. They also spoke about largest expansion being in the chemicals and carbon black business. They'll be expanding in chemicals business through acquisition. Some of them are already done. They'll be doing more of it. They'll be back integrating into yellow phosphorus. They'll be investing in oil and gas business, oil and gas chemicals specifically. More capacities will be added globally. And they're also getting into cathode chemistry for EV batteries. This is a new segment altogether for them. And over the next 5 years, PCBL's PAT should see 5 times growth. That will be around 2,400 to 2,500 crore rupees in next 5 years. Very bullish commentary coming in from the management. And after that, we've seen the stock surge. In fact, let's listen into what the management told us earlier.
PCBL will grow in rubber blacks, but more importantly in specialty blacks, so where your margins become much higher. In rubber blacks, you make X%. In specialities, you make X plus so much. And that's the reason for the 14% going to 16. The 16 would actually probably go up to about 17, 18 as we go along. But more importantly, or as importantly, we will be expanding in chemicals through our acquisition Aquafarm. So we will be expanding in phosphonates in terms of capacity. We will be back integrating into yellow phosphorus. We will expand in the oil and gas chemicals. So we are going to revamp our manufacturing facility in Texas. We are going to add a manufacturing facility in addition to our blending facility in Riyadh. And we are going to start this whole thing on green chelates, which is biodegradable product that goes into the granules that go into the detergents industry.
Okay.
And so there are not many players in the world who do this. So we will be one of the 2 or 3. And in addition to this, we are getting into the cathode chemistry for the EV batteries. I would expect to see over the next 5 years at least a 5 times growth.
A 5 times growth from
5
what
times
you...
growth from what it was, 490. I would expect it to be at the 490 translating into between 2,400 and 2,500.
Well, that's PCBL up 10%, but another RP Sanjeev Goenka Group company which is doing very well is FirstSource. And this is on the back of their Q1 numbers. It's a very strong start to the year for FirstSource. The company's revenues have gone up by 7% quarter on quarter. Year on year, it's a revenue growth of more than 15%. Part of the growth is attributed to the consolidation of an acquisition that they did. But even if you exclude that, analysts point out that this is higher than what they were anticipating. And when was the last time we had such a strong revenue growth? If you plot the year-on-year revenue trend for the company, 15% has, double-digit revenue growth has not been seen in a while. Because of this Q1 performance, the company is also upped the full-year revenue forecast. So earlier they were guiding for a 10 to 13% revenue growth. Now they're anticipating FY25 revenue growth to be 11.5 to 13.5%. The company's won some good deals, 3 strategic large deals. They've added 10 new logos, that's clients across BFS Healthcare and the CMT, that's Communication, Media and Technology. The company goes on to say the pipeline is robust. EBIT margins, though, have come down to 10.6% versus 10.9%. Hemang Jani is now with us on the show. Hemang, afternoon. Thoughts on PCBL and FirstSource from here?
Yeah, good afternoon, Rima. I think for both the companies, the management commentary and the outlook have been, quite positive. And when you look at the PCBL, the company has added significant capacity in the last 2 years. And now with the management talking about their plans to move up the value chain, the specialty product part, would add almost about 180 to 200 basis points to their margins with a significant volume growth. So the stock already has run up quite a bit, and we have a price target of about 380 rupees for the stock. And I think it would be good to kind of try to buy into this at a small dip rather than chasing the stock. As far as FirstSource is concerned, I think the numbers have been very good, and what market took by surprise is the kind of guidance upgrade that we have seen, not only for this year, which has been raised by about 11 to 13%, but they are looking to double the profit over the next, let's say, 2.5 years, which is quite significant, given the backdrop that we are seeing as far as IT space is concerned. So we have a positive outlook on FSL also, with a price target of 320 rupees.
Okay, so that's PCBL and FirstSource. You've got a positive outlook on both the stocks. Hemang, got that. Good to have you on the show. Let's talk about 2 consumer stocks and very different destiny today in the market on both of them. There's Colgate on one hand. You just can't complain, right? Numbers have been so solid. And then there's Varun Beverages. Very unlikely. We don't see a disappointment from this company too often. But then it seems to have missed the mark. The commentary is not very enthusing either, considering perhaps their best seasonally high summer season is now behind them. What do you think? So would you buy the dip on a Varun? That's one question. And then thoughts on Colgate?
Varun Beverage is a bit of a disappointment, both in terms of revenue, where the disappointment was almost about 300 crore, which is significant. EBITDA impact was about 130-40 crore. And margins, about 27.8 was the expectation. The actual number was much less. Bit expensive stock, and particularly when you have this kind of a disappointment, maybe for at least a reasonable period of time, it's like next 2-3 months, the stock is unlikely to outperform. We should look out for the names where you see upgrades or where the numbers are slightly better. So from that perspective, clearly Colgate was a blowout sort of a quarter. And what was very important is that the volume growth is coming back, right? And the margin picture, if you see the gross margin 70%, the operating profit margin 34% is extremely heartening to see. So would be very comfortable buying into some of the FMCG names, maybe HUL, D-Mart, and of course Colgate would be one of the names that we would be comfortable buying into.
No, got that. In the broader market, there is so much happening, right? Yesterday, around the same time, or maybe a little later, about a little past 3, we were talking about how you had a big move in Voltamp, which was up about 16-17% after numbers had come. Look at what Apar Industries is doing today. That is the big mover of the day right now. So it's about 8% in the green. And I think here as well, of course, numbers are, I think, the reason why you got a sharp spike. And the rally started mid-afternoon at about 12:30 or so. And the stocks moved from about 8,500 to the 9,300 levels. So that is Apar Industries. Do you have coverage on this one, Hemang? Apar? Or, others in the group?
No, Prashant. Apar, we don't cover. Voltamp also, we don't cover at this point of time.
Look at Skipper. Skipper is up 10%. Broadly sort of sticking with that power infrastructure, ancillary kind of space. Lots happening in that area. We got KNR Construction, which is up about 5.5%. You got Jindal Saw, which is up about 6.5%. Nykaa is coming up with a 7% pop. Nykaa still, of course, amongst the companies which listed around the 2021 period remains a stark underperformer. Stocks under 200 rupees, but seeing some activity on decent sized volumes as well. And look at Adani Energy Solutions. Nimesh yesterday pointed out that there perhaps is a QIP coming. There's a fundraise coming, and that stock is up about 6.5% as we speak at this point in time. Hemang, so instead of me throwing a name your way, tell us what you are advising clients to do and what stocks are on your radar.
And purely from a results play perspective, I think Zomato, we are expecting a blowout set of numbers purely because of the kind of momentum that we are seeing in Blinkit. So this would be one of the stocks that we would be comfortable buying into for results. Dixon, today the numbers are going to be out, and because the last quarter was not so good and the management had guided for a better number, so there is an expectation that this time around the numbers are going to be slightly better than what the market is penciling in. And apart from that, we do think that the wealth companies are extremely well positioned, whether it's Nuvama or 360 Wealth. I think if you have any kind of restrictions on the derivative transactions by retail, then the money could flow from the discount brokers or some of the brokerage companies to the wealth companies. I think that could be an interesting theme to look at.
Okay, all right. Hi, Hemang. Good afternoon, and good to see you in. What about Exide? Hemang, I think it came out with a set of numbers. The stock Astis is up close to 115% in the last 1 year or so. For the time being, it's down 4%. From the highs of the day, it slipped a little bit. Any view at around 530 rupees? Bulk of the good news in the price, or is yet to come?
I think, Nigel, both the battery companies, Exide, Amar Raja, they have done well, partly because of the overall growth in their core business and the EV-related, additional, positivity which is around because of the fundraise, the capacity, etc. But I think, given the valuations, we are not comfortable buying these names at this point of time. I think it's time to focus on some of the newer themes which are having their own triggers and valuation comfort both. So I think agri would be an interesting theme to look at, fertilizers, specialty chemicals, which were out of flavor, but I think now they are kind of seeing much better data points, and we are more positive over there.
Hemang, we'll leave the conversation there. Thank you very much for joining in. Also, keep your eye out on Indus Stars. Reports numbers today, and along with that, the board will also consider a buyback. So that's something the street is watching closely. Get into a break. On the other side, Ajay Vora of Nuvama Asset Management will join in.
Okay, welcome back. Ajay Vora is with us. He's head of equities at Nuvama Asset Management. Ajay, good to have you with us here. Thanks very much. I mean, of course, not to ask you about your stock, but it's been an absolute, what can I call it, banger. 60 rupees in earnings, very, very strong growth, and wealth management is doing well. I mean, And I was looking at some estimates which suggest that even after the very strong performance we've had, the P multiples on FY25 are in the 20s. If you, of course, consider that markets, etc., stay pretty solid. What's your view about the space? Not about Nuvama itself, because I know you can't comment about it, but on the wealth management as a space.
Hi, Prashant. Good afternoon, and thanks for having me on the show. So you're absolutely right. So, I think, wealth management is a subset of what is happening at a larger theme. And I think the bigger trend, what is playing out in this country is the wealth effect. And you need to pick and choose the subsectors which will benefit because of this theme. And obviously, the wealth managers are participating this in a very big way, and they are at the front end of this whole theme. Because as and when, more and more people are getting wealthier, as we all know, people are looking for more sophisticated products, diversification into different categories. And the only way where investors can actually get access to these kind of products is through wealth managers. So eventually, just like any other business where the distribution becomes the core to grow your business, similarly, these wealth managers is at the core of any financialization of the savings. So I think that, the trend is very strong. And, apart from that, if you look at other themes also within this large theme of wealth creation, you look at real estate or you look at travel as a theme, they are also doing exceedingly well. So I think the way I when I talk to investors, I would generally, recommend not to look at, more of index where it is heading. But it is the trends which are playing out in this country and the subsectors which can benefit because of this whole large wealth creation theme, which is one of them.
Jay, if markets were to see a bit of a shakeout, how does that affect wealth management companies? I mean, if there were some redemptions or whatever, we don't know. If there is a bit of a, not a very sharp pullback, but a 5-10% kind of a correction, does it have a direct impact?
So I'll tell you that, obviously it does have an impact. So there are two parts to it. One is the MTM. So, we talk about the AUM under advisory, which works more on new flows as well as the, MTM that gets impacted. And secondly, people may hold on to their new investments. But at least, from my interaction with the investors, what I've realized is that at least if you look at equity as a whole, a lot of investors are looking for some pullback since a very long time and are looking to deploy into different products. But unfortunately, market has been trending up, almost for last 6, 7, 8 months. And people have been on sidelines, although they have participated. But I think not wholeheartedly what they would have participated. And therefore, even at lower levels, just like what you saw during the election time, incrementally, we are seeing a lot of inflows. So my sense is that, it can be a knee-jerk reaction, but investors who are looking at this theme are having a view of at least, I would say, 3 to 5 years. And therefore, the wealth managers' overall size also, if you look at it, the market cap of 2-3 players put together, it's less than $10 billion right now. So my sense is that the opportunity is pretty large and not to get swayed away by the near-term movements.
Ajay, but at Nuvama, what's the call? Is a shakeout in the market coming, perhaps in the next 6 to 9 months? Do you foresee a significant correction, one that we've not seen in a while?
So, Rima, the thing is that, everyone has been talking about a shakeout and a correction since a fairly long time. And I think people have lost more money staying on sidelines rather than participating in this. So the way we are looking at this is that, all the large events are behind us. Globally as well as locally, now we are entering into a period where, globally the rate cycle may start. Locally, if you look at it, election was budget and election, both were the biggest events which people were worried about. They are behind us. But at the same time, I would say that, not much may happen at the index level, because if you look at FY26 earnings, which is expected to be around 1250 rupees EPS for Nifty, Nifty is trading at around 20 times at an aggregate level. And even in this quarter, so far, the numbers, which has come out, there has been a little bit of disappointment versus the expectation. So my sense is that, at index level, not much may happen. The compounding can continue at around 10-12%. But I think the money-making opportunity is more at the broader level, broader themes, the bigger trends which are playing out across, market, be it manufacturing, be it, exports of goods, or as we discussed about real estate and a couple of other themes. And I think that is where one should focus on.
Hi Ajay, good afternoon. Good to see you in. What do you make of this recent announcement on the real estate theme? You know, they've gone ahead, they've cut the tax rates a little bit, but indexation goes out. You were positive on real estate, so I ask you this. What's your current view?
So, Nigel, we continue to maintain a fairly positive and constructive view on real estate. I think that, it definitely opens up an incremental avenue for people who have that excess liquidity. With the duration of holding coming down to 2 years and the taxation coming down from 20% to 12.5%, it definitely opens up one more asset for the investors to diversify, whoever are not holding it. Obviously, people who have bought in from 2001, there is an impact because of indexation going out. But I think if we take a fresh look from here on, there would be definitely a large part of the investors who would look to diversify now into real estate. And more than investor community, I think that the end user, as I discussed, the wealth creation impact, I think real estate is at the front of that whole opportunity. And my sense is that, lot many households are yet to upgrade. And as and when their portfolios or the wealth increases, most of the families would look to, buy a new house. So my sense is that the real estate theme is not a 2-3 year theme. It is here to stay for a longer period of time. And therefore, we maintain a constructive view over there.
Got that, Ajay. So you think the good times have only just started in real estate. What else? I mean, where else do you see value is a very difficult term to use in a market like this, but where else do you see at least reasonable prices where one can expect reasonable growth to come in as well? Give us some more themes, anything new on the horizon. And by the way, we'll have a brand new segment opening up with the Ola Electric now. First of its kind, pure play EV sort of theme to back. Thoughts here?
Yeah. So Survi, actually, we are fortunate enough, that our market at any point of time throws up n number of opportunities. So I think that as money managers, we are fortunate that we don't get stuck with a particular theme, and therefore, you keep looking for themes. Eventually, you'll end up getting many such opportunities. So one such, I would say a trend or a theme which we are working on and we are pretty constructive are the companies on the manufacturing side which are nearing their overall capex. So if you look at tires as a segment, they have been into this whole capex mode for last 2-3 years, and more or less by this year or next year, mid of next year, they'll be done with their whole capex. And if you look at the valuation versus all other auto ancillary, they are trading at 2x kind of a valuation versus the tire companies. And if you look at, the way crude is behaving over last maybe few weeks or so, and going forward also, we are not very positive on crude prices. If that stays lower, the margins which most of these tire companies will make, and therefore the valuation which they're trading at right now, I think there is a significant money to be made on this whole tire space. Similarly, the second theme, which we are extremely positive, and we have been, on the right side for a fairly long time now, almost a year or 18 months, is the whole OMC space. I think if you look at, or if you listen to the HPCL con call also today, they have been very positive on the outlook. And, they are nearing their completion of the large part of their capex by end of this year, which will add to a lot of, efficiencies and improve their refining margins by almost $3 to $4. So my sense is that, if you look at the ROEs of all these companies over a longer period of time, say 8 to 10 years, they have been doing 20% ROE. And if you do the math and put in all the numbers, these companies with a 20% ROE are trading at less than 10p or maybe 5 to 6 times EV to EBITDA. My sense is that over here as well, a significant money can be made over next 1 or 2 years.
Actually, IOC has just reported the Q1 numbers. It's a miss on revenues, it's a miss on margins. But as Ajay was pointing out, perhaps the outlook is better. Even for HPCL, if you remember, Q1 was a miss, but the outlook in the subsequent quarters with respect to, the GRMs, given crude prices have fallen by nearly 8% in the month of July, is far more robust. So IOC too, it's a miss in Q1. We'll await Sonal. She'll join us in just a bit. But I think the stock is holding up, still up, close to about 1.5%.
Absolutely. Actually, Ajay, just come in with some more detail on this, because everyone was trying to wrap their head around it, because on HPCL, that under-recovery picture was really ugly on LPG, right? Almost 2,500 crores of under-recoveries, and God knows whenever they get the money in from the government. Is it that you're just expecting that a company like HPCL is nearing the end of the capex cycle and therefore ROE will improve? What else is the trigger? One trigger is, just crude. So it could be a great trading play as well because the price was below 80 in the morning. Just explain more on why you still like oil marketing companies.
So just if you take the example of HPCL, and they clarified on the con call as well that the LPG under recovery which had played out in the current quarter, they are pretty hopeful of recovering that from the government at least by end of the year. So that was one major clarification. Secondly, if you look at it that they have been talking of demerging their entire lubricant business. Now, if you look at their lubricant business, that is 3x the size of Castrol. Although the mix is different in terms of B2B and B2C. But today, if you look at Castrol's market cap, that is somewhere close to 27,000 crore. And HPCL market cap is somewhere around 85,000 crore. So I'm not saying that, like to like, there can be a similar market cap assigned to the lubricant business for HPCL. But whatever math, if you end up doing, and if you strip off the entire lubricant business and then you look at HPCL on a standalone basis, there is a large part of investments also into other companies. So if you strip off all those things, company has officially guided for around 40,000 crore of EBITDA by 27-28. And therefore, then if you do the math, these stocks are trading at around, I would say, anywhere between 3 to 3.5 times EV to EBITDA. So my point is that once you have the capex completing, you will have a significant cash flow generation possibility going forward. And especially when the GRMs are likely to improve because of their newer capex, these stocks are looking pretty cheap. So therefore, we can talk about, the other two companies as well. But I think this whole space, because of the factors which we discussed, is looking interesting.
All right, Ajay, we'll leave it there. A great chat as always. Thank you very much for joining us. It's a pleasure, as always. The market's cooled off a little bit, so 45 points is all that the Nifty's got left. So 24,881 is where we're at. We'll take a break, and as always, we'll get you the D-Street chatter, what's happening in dealing rooms, what are the stocks to watch out for with Nimesh, and some trading ideas as well. Stay tuned.
Welcome back. Well, the markets have taken a bit of a U-turn actually in the last few minutes. From being on the verge of around that 24,950, we've slipped a good 80 points, and that's been rather quick. SBI Life is one stock that's rallied of late. That's slipped a little bit, but I think heavier names like an ICICI Bank has come in a little bit lower. I think this has to do with the Nifty Financial Services Index weekly expiry as well, because a lot of banks and NBFCs, they have seen a bit of a drop, and even insurance companies, which are part of the Nifty Financial Services Index, but not part of the Nifty Bank. So that one should come up for you on the screen. Perfect picture up out there. But good time to get a Nimish. Nimish, what are you making of all the trading action?
Strong day for the markets, and actually it's backed by FI buying, institutional buying as well. We saw we saw the big DI number yesterday as well, almost 5,000 crores, and that's what it's getting played out. So the cash which a lot of funds were sitting on the sidelines having cash, now they are coming out and deploying that money. So that probably explains a big move, especially in the large cap names. And even the broader market stocks have done well today, well in the last couple of days, largely on back of that buying interest. So that seems to be the trend. And remember, there is still not large supply, which will potentially come up once the earnings season gets over. So till then, you're going to see this activity in the broader markets to continue, largely on the back of the DI flow. So that's the overall trend. The sector of the day clearly stands out to be the chemical names. A lot of stocks are buzzing in that space. Big moves on some individual names as well. And I understand some bit of interest is back from larger FIs as well in the chemical space. So that's the reason why those are buzzing. But again, as I said, a lot of money is getting deployed into the broader market stocks. So that explains the index. Mid-cap index is up nearly 1%. Small-cap index is also buzzing in trade today. So net, I guess, a good day of trade. But again, it's backed by institutional buying. And within that, the DI seems to be redeploying the cash that they're sitting on.
And today we'll have to watch out for that large trade in the institutional numbers as well when we are analyzing that. So we'll have to keep an eye out on that. What about individual stocks, Ramesh?
Well, so in terms of individual stocks, the first name is Protein Eager One. Big move in that stock. Even in today's trade, the stock is buying 7%. But this month, the stock is up 70% and has seen a big outperformance, largely because one of the large influential investors was a buyer. Now I understand that that particular individual has now crossed 1% holding in Protein Eager One. So that's the reason why that stock is buzzing in trade. The second name is Z Entertainment. While the stock has been buzzing out of the earnings, but I understand from an institutional point of view, there is heavy selling at a leading FI desk in Z Entertainment. So at these levels, some bit of institutional investors are active sellers. The third name is ONGC. Big move in, of late, the stock has relatively outperformed, largely on back of a lot of HNI interest. So, well, the institutions have been buyers, but even HNI interest is quite high in ONGC of late. And there is a buzz as well that maybe the company will announce some new discoveries in one of their oil wells. So that's the reason why ONGC is buzzing of late. And the last is REC. While the stock has recovered from the day's low, there was selling pressure from larger FIs. So expect high delivery volumes, but largely there is selling pressure at these levels in REC.
All right, Nimesh, and that Adani Energy, you put it out yesterday. I think the stock is buzzing today as well.
Yes, so Prashant, looks like the QIP will get launched today. That's the indication from the investment bankers as well. The demand seems to be quite strong. I had an inclination that maybe this week the QIP will get launched. I think the company is looking to raise around 6,000 to 7,000 crores in this QIP issue. Remember, the board approval was for 12,500 crores, but they will raise only 6,000 crores. So I guess once that money gets raised and from influential investors, maybe that explains, the stock is reacting today, because largely the book has been done and there are some big market investors who are coming in the QIP.
Okay, thank you very much for that. Ajanta Pharma is reacting positively to the margin beat. EBITDA has beaten the CNBC-TV18 poll by nearly 30%. EBITDA margins at almost 29% versus estimates of 26.5%. And that's driving a near 20% increase in the company's profits. The stock is now up close to about 6%. And another stock reacting positively to earnings is Force Motors, where the profits have gone up by nearly 70% at 115 crore. And Force Motors is on fire, 9% gain on that and pretty good volumes. Get into a break. On the other side, we'll get you a few BTST calls from our technical experts.
Well, things can really turn around and the market is practically giving up all of its gains. Nifty barely positive. Now it's a very, very sharp sell-off. This is the second time this is happening. Remember yesterday at that level of 24,999.2, 0.8, yeah, actually is where the market turned, and then it was a complete waterfall decline, very similar to what we're seeing right now. So yeah, that's the extent of the fall. It's across the board. Mid-caps are down as well. Index is now looking at a gain of just about 0.4%. Mitesh is here. Good time to get him in. Mitesh, once again, very similar to yesterday, sudden nerves coming in, and the shakeout ends up being a very quick one. What do you make of it? What's the advice?
So I think once again, 25,000 is coming to play. Open options, open interest, and the fact that the bank also declined suggests that we need more consolidation. Now, on the downside, good chance that 24,700, 25,000 could be the range for next few days. Let's take it from there. But for the time being, I have Ajanta Pharma as a buy. I think the numbers you just gone over very good, but the chart is also given a good breakout here. So keep a stop at 2470 and look for targets of 2600. And one call on the selling side, which is STVT on Birla Soft, which I would recommend taking a STVT with a stop about 715 for targets of 696.
Well, the fall in the Nifty is courtesy the Nifty Bank, and today, remember, is also the Fin Nifty expiry. The Nifty Bank is down sharply, 450 points off from the session highs, with names like ICICI Bank under pressure. ICICI Bank is now in the red. Kotak Mahindra Bank too has got a cut of close to about 1.5%. HDFC Bank is in the green, but again, it's come off quite sharply from the day's high. Mitesh, a quick word on the Nifty Bank and any of these constituents, these large cap private banks?
See, the bank Nifty is very clearly underperforming. So till it get past 52,600, I think then the bigger breakout comes into play. Till then, I think you'll have to keep looking at smaller pivots, and it's still not showing signs of breaking out. The other worry is the private banks. I think while PNB and SBI are still looking okay, Kotak Bank, I think in the last 1 hour has given some kind of a negative breakdown, and in fact, it could retest the recent lows of 1730, 1740.
Okay, thank you very much for that. Let's also invite Jay Bala of cashthechaos.com on the show now. Jay, looks like 25,000 is taking us a little while. Yesterday, we got precariously close to it. And today, there's been that sell-off taking place in the last 10-15 minutes. What's the setup for the near term?
Hi, good to be here, Rima. It's more than the 25,000 level for the Nifty. It's the global macro that's going to weigh on the global equity markets from this point onwards. Yes, 25,000 could be a psychological level, but in my opinion, if this level were to get taken out, there's possibility of one more high, about close to 25,600. But we should be watching supports rather than resistance from this point onwards. We have possibly turned in the tech-driven, AI-driven rally. There are indications that the US tech stocks have topped, and so that's the important important macro that you're watching. NVIDIA has the 50% of the global macro. That's broken significant support. So watch significant support on the Nifty. Early warning signal for the Nifty would be if it were to close below 24,700. That'll be your first warning. But critical trend support is still at 24,076. As long as the July 23rd low holds for the Nifty and what 24,076, we are okay for the market, but we should be watching supports.
Okay. Good to have you, Jay. So, just looking at the sudden volatility that the market is in the midst of, would you be looking at any index trades here at all? Nifty, Bank Nifty? Otherwise, if there are any specific stock trades from a positional standpoint that you have in mind, do share.
That's right. I'll be watching for short side trades if Nifty were to close below 24,700. And until that point, I'm not touching any of the mainline indices. But when it comes to specific stock indices, the auto sector is absolutely critical. This bull market is likely to continue as long as the auto sector can hold above the July 23rd low. So I have two bullish setups on the auto ancillary space. One is Exide long on Exide with a stop loss of about 523 with a price objective close to 650. And another long on Samvardhana Motherson Sumi. A stop loss about 181, the price objective of 220. But what should be implemented along with this is that we should be going down to about 25% of usual allocation, because as I said earlier, the global setup is such that I'm anticipating a rise for the stocks index, which is likely to be a counter trend bounce. And then I'm anticipating a sharp sell-off to start at about 5,600 price level on the stocks index and see strong price rejection. If that were to happen, I'll be very cautious on all the longs.
You're saying you're expecting, some sort of an uptrend, counter-trend rally on global indices. I missed the name of the index, and also just tell us about the US market itself. This distribution that we're seeing, the move away from the Mag 7, with the Russell doing a little better. What do you make of this change in trading patterns there?
The index I spoke about is the Philadelphia Semiconductor Index, the SOX index. So I anticipate bounce towards 5,600, almost the same level for the S&P 500. If the markets were to see strong price rejection from for both these indices from this level, that's an indication that the top is already in place, and I'll be anticipating a break of the last week's low, last Thursday's low. So that's the important benchmark for me. The overall setup for the US market is that the Mag 7, the FANG index, which is the NY FANG for you on the Reuters score. And if you look at the NASDAQ, NASDAQ index as well as the E-mini NASDAQ index, they are likely to see a bounce somewhere towards on the futures NASDAQ NQ. The symbol, you're likely to see a bounce somewhere about 20,155 and see a strong price rejection. That's my anticipation. And if you look at the EEs too, they are looking, my anticipation was for a drop towards 3.7, but it's holding pretty well, just about 410, 420 pips. So if tomorrow, post the Fed meeting, we have to see, less choppy move towards the downside and pull back to the higher side, that's an early indication that we are likely to see stronger and earlier yields rise, and there are no rate cuts coming this year, which was my earlier projection in January itself. So watch out for these signs on the key macros.
Okay, flattening out completely now. And it's not just banks. Now, even the life insurance companies. So, an HDFC Life, SBI Life. SBI Life is down 1.5%, but HDFC Life, with the sell-off in the last 10 minutes, has now dipped into the red. Get into a break. We'll come back and continue our conversation.
Very, very quiet out there as far as the market goes. Most of the mid caps, they've managed to retain a bulk of their gains. But today, I'm just listing out some of the good earnings today that have been rewarded. So Jindal saw Zen Technologies continuing on a 5% circuit. By the way, second day running. Granules numbers were well received by the market, 4% higher over there. And then there's, of course, Skipper. So some of these stocks are still retaining a bulk of their gains. The collateral damage has been on Idea Forge, Varun Beverages, and even Exide. Exide's numbers were okay, but the stock's down about 3.5%.
By the way, India Mart's numbers are very strong, particularly on the margin front. 36.1% EBITDA margins. This is the highest level of margins that we've seen since Q3 of FY22, which means more than 10 quarters back. For the last 10 quarters, margins for the company have been between 25 to 30%. But this quarter, margins have shot up to 36%. And that's the big highlight. Revenue growth continues to sustain about 5.5% quarter on quarter and 17.4% on a year-on-year basis. But I think the key highlight is the margin performance, and that's driving a 27% year-on-year increase. Okay, my calculation shows 20%. We'll wait for that profit number, but an increase in the company's profitability also.
Absolutely, that stock's really surging away. The other names include something like a Kansai Nerolac, where numbers have been well received by the market. So plenty of individual stocks catching the eye. Jay, anything interesting you're noticing in the consumer space? A couple of stocks, Colgate reacting to good numbers today, so it's more earnings driven. There's Nykaa, which is looking very strong this afternoon as well. Nerolac we discussed. Anything in consumer that you like at this point?
I do definitely like the index itself. As I discussed 2 weeks back, I said that even though the FMCG index has crossed 60,000, anticipating higher highs to come through, Colgate that you mentioned a few moments ago, even that's looking attractive, and momentum is extremely strong. Possibly a defensive play if the market were to turn down, and the objective remains somewhere close to 3,600 to 3,800 for Colgate. So I like Colgate from the space.
Okay, let's talk about Tata Consumer, awaiting numbers from that big boy. Mangalam now joins in with the key expectations. Mangalam.
Well, for Tata Consumer, the important part this time around will be that this is the first quarter where we will have the full integration of Capital Foods as well as Organic India. When it comes to the top line, we are expecting double-digit growth. Of course, this will be led by these acquisitions. There would be margin improvement as well. On the top line, you're looking at a number just shy of that 4,400 crore mark, a 17% growth, and the EBITDA grows a tad higher, and as a result of which margins come in at 15%. More importantly, the net profit would see an optical decline because of a couple of factors. One, the base was higher. Secondly, this time around, there would be the element of both higher depreciation and higher finance costs because of the acquisitions that the company made and the debt that they had to raise to fund those acquisitions itself. The India business will see an 8 to 9% volume growth, 8 to 9% growth led by 3 to 4% volume growth. Beverages would see around 4 to 5% growth as well. And more importantly, Capital Foods and Organic India would add about 250 crores to the top line this time around. What I'll be watching out for in particular is the growth that the company posts in both their Sampann, Soulful and the Narishco part of the portfolio, which the management had guided for 30% growth for the entire year. For Narishco, because it's a seasonally strong quarter, we would see probably better growth.
Okay, all right, Mangalam got that. Thanks very much. So watch out for Tata Consumer. Jay, anything else interesting that you're noticing in charts? Gold, for instance, so much chatter here in the local market because of the customs duty cut. Prices have moved all over the place. But overall on the charts, any advice here? Oil, for that matter, oil has been moving down despite all this talk on what's happening in the Middle East with Israel. Prices have been cooling down quite a bit.
That's right. The medium-term trend for Brent is quite clear, but it's not clear in the short term. It's got one more higher high to come through, somewhere close to 87, 88. But if Brent were to break below 76, I think the medium-term trend towards $50 and lower has already begun, although it's a little bit late to recognize. When it comes to precious metals, I'm still bullish, but I don't like the short-term price action. As long as gold can hold about 2,200, I think the price objective remains towards 2,600. As long as silver stays above 26, the objective stays is focused towards 33.5 and $34. But the copper has actually broken down. We had discussed this on the 21st of May. when the COMEX copper was making a high and forecasted a 10% drop. It's dropped 10% and done much more. So this is telling an important warning on the macro side too. So keep this also in consideration.
Okay, I think, Jay, we'll leave it there. Just sort of starting to wrap up things. Thank you for joining us. And of course, we'll speak with you shortly on markets forward. 3-point change. So it's going to be as flat as they come. 24,840 on the Nifty. And, the Bank Nifty also will be flat. I think by close, it'll come up on your screens. Nothing. 1-point change on the Nifty Bank. So this is nothing on the indices. But mid caps and small caps, I think way more different. With the small cap index ending with almost 1% gains. The mid cap index, I think, ending with a 0.5% gain today. 0.4% and 0.86 respectively on mid and small cap indices there. Market breadth, very, very positive. I mean, I think if you were to summarize, it's basically, the continued momentum and vibrancy in broader market. Large caps took a bit of a break at the index level, really. So that's essentially the long and short of it. Once again, I think the high today, let me just look at how close did we get. Did we get as close as yesterday? The high was 24,971. Yesterday, of course, we got almost 225,000. It's actually an inside day as well. So we basically spent the entirety of the day within yesterday's range, between yesterday's high and yesterday's low. So just kind of indicates a little bit of indecision. Rarely has the market shown that indecision over the last many months now. It's been up and up. So we'll see if that continues tomorrow onwards. But as I said, broader markets, absolute rocker of a session once again.
Okay, a quick word on the big gainers then. Power stocks, NTPC Power Grid post their Q1 numbers. For Power Grid, it's the increase in the guidance on capex and capitalization which excited the street. Top owners go to Tata Motors, 3.5% gain. Oil marketing companies higher, BPCL up close to about 3%. Banks started off with some promise, up nearly 500 points at one point of time in the Nifty Bank, but closed absolutely flat, with names like ICICI Bank ending in the red. Some of the top losers include an LTIMindtree, SBI Life coming in for some profit booking, Cipla, Sun Pharma in the pharma pack down 1.5%.
Okay, not too bad for the mid caps. You still had high movers and shakers. Nykaa, Kansai, Nerolac, 7 to 8% up on these stocks. CAMS up about 8.5%. PCBL, we've been discussing the huge move on Philips Carbon, up about 11%. Newland had a good day, 7% on the higher side. IIFL Securities, Skipper. So a fair amount of winners in the mid-cap arena. Varun Beverages, of course, was a big disappointment after numbers, down 6.5%. And Idea Forge was the other, down about 11.5%. So the bell has gone and the day has ended with the bulls once again failing to scale Mount 25,000. That's where we take your leave on closing bell. But don't go anywhere because all the market action continues. Up next is Markets Forward.